Welcome back, America, to the next episode of Searching for 8%. My name's Max Drew. I'm a CPA located out of Sacramento, California. I'm a licensed financial advisor in the state of California and a licensed life insurance and annuities producer here in the state of California also. And today we're going to be taking a look at just a market recap. This is meant to be a weekly show, Searching for 8%. Now, the reason I call this Searching for 8% is because out of hundreds of financial presentations, even thousands of financial presentations, people from all backgrounds and all classes of people seem to be thinking about 80-90% of the time that 8%, somewhere between 4% and 8%, is an expected rate of return for your market portfolio to grow when you're invested in the stock market. So we're going to explore that, see if that's true, at least for what we're looking at today. And we're going to see how things have been going the last week, the last year, the last 5 years. And we're going to have a little bit of fun. We're going to be looking at a couple of different areas of the stock market. We're going to be looking at something that I kind of enjoyed looking at. We're going to look at Giga Chad. I don't know if you guys have heard about Giga Chad, but this is just kind of a side thing, a little bit of fun. We'll look at Giga Chad for the minute. Now, remember, this is not specific financial advice for you, the viewer. This is for entertainment purposes. If you do want to work directly with me, feel free to contact me. I'll provide my contact information here. I am licensed in the state of California. Depending on licensing requirements, can do some business outside of the state of California. And certainly if somebody contacts me and they want to do business outside the state of California, generally it's not a problem for me to obtain licensing in whatever multiple state they like to do. But just have to add that disclosure, keep everything tippy top, as they say. So we'll go ahead and start today. We're going to do a little bit of a market recap. I always like to train my clients, and I like to train my audience to take a long-term point of view. Now, remember, day trading, well, there's a lot of courses out there. People be happy to say day trading courses, letting you know that they've solved the secret. And if you get their secret sauce, you're going to do a great job day trading. But unfortunately, 80 to 90% of people, when they day trade, they lose money. So if you want to be a loser, you have a pretty good chance if you're a day trader. But not all day traders are losers. Some of them do make money. But it's a little bit closer to gambling. Is investing in the stock market gambling? Well, let's see what we can find out here. One of the things I like to look at to understand the markets, I usually like to look at, whenever I'm looking at the markets, I'll look at the trends. I'll look at what's happening today, what's happened last week, what's happened last year, what's happened in the last 5 years. And one good way we can get an overall understanding of the market is by looking at the major indexes. So bear with me while I go ahead and share a little bit of research here. And we're going to start out looking at those major index. Later on, like I said, we'll have a little bit of fun. We'll be looking at Giga Chad. Later, we'll look at something a little bit more tragic, the financial devastation left by the wildfires in California. Remember the Palisade fires down in LA? Seems like California's always getting a lot of fires. Oh my gosh, we're burning up in the state. And then we'll look at something like the terrible tariffs that Trump's brought in. And then we'll look at a few stocks that have been affected by the economy and a couple of stocks that I feel that have, unfortunately, they're great household names, but recently they seem to be a bit of losers. Get the big L, however that is, that side. But anyway, not that I like to call names or anything, but we'll be taking a look at some stocks. Just like last episode, you probably remember that we're looking at some stocks that did really well. This time we'll look at some stocks that haven't done so well compared to the indexes. So thanks for joining me today. Let's get into it. All right, the first of the indexes that we're going to look at is the Dow Jones Industrial Average. Now, over the 5 days, it's been up a little bit, 0.37%. So this was the market close. This is as of the market close on June 3rd. So the market was up 0.37% according to the Dow Jones. Now remember, the Dow Jones, the nickname for the Dow Jones is the Dow 30. Just 30 stocks, but these 30 stocks make up about $19.5 trillion. Now these are big companies, and some would even say these are companies not to be toyed with. In fact, they tend to make up more than many of the GDP. Their net worth is worth more than the GDP of many countries in the world. We're going to take a look at that. Now, if you take $19.5 trillion, you divide it by 30, you get about $650 billion. So remember, one of these companies is worth about as much as Elon Musk. Now, today we're not going to go ahead and get into each company by itself, but we're just going to go ahead and acknowledge that about the indexes here. The next major index we like to look at is the S&P 500, and I'm going to go ahead and look at that together. Remember, this is all part of your education, hopefully. I hope you're enjoying this. We'll be learning a little bit about this as we look at each one. This is about 500 companies, the largest 500 companies in the United States. And instead of making up 19.5 trillion, it makes up about 52 trillion. So about 2.5 times larger than the Dow Jones, but 500 companies. So if you take 500 and you divide 52 trillion by 500, that equals about 104 billion per company that's worth. So we're going to go ahead and take a look a little bit about that. The last 5 days, it has been up almost 1%, 0.76%. So compared to the Dow, which was up 0.37%, it's outperformed the Dow by about 100%, depending on which way you look at it. So it's about twice as much as the Dow has. The next major index, which I would like to look at, is the NASDAQ 100. These tend to have some foreign exposure, but I believe it's about 90% domestic. And these are the top 100 companies in the NASDAQ. NASDAQ's made up of over 4,000 companies. And the NASDAQ 100 is the top 100 non-financial companies in the NASDAQ. I always like to remember the NASDAQ's a little bit more modern. We'll take a look at that. As you can see here, over the 5 days, it's up about 1%. So about 3 times as robust as the Dow Jones, a little bit less than 3 times. The S&P 500 does about double what the Dow did. The NASDAQ did almost triple what the Dow did. So we're seeing kind of a correlation here between how these indexes perform. Now, of course, the last year, many people say, oh, it's been so terrible with that Donald Trump in office and him going off the rails on these tariffs. Well, let's take a look at how the last year's been. Well, we're going to take a look at the year to date. He started imposing these tariffs this year. What's happened to the Dow Jones year to date? It's come in at about 0.3%. So basically flat overall, tiny bit positive. And remember that the Dow Jones is actually the oldest of the modern indexes. It's about 140 years old, just for context. Now the S&P 500 is about 67 years old. It's about half as old as the Dow Jones. So it's not the grandfather index. I like to call this one the mom and pops index. And we're going to go ahead and take a look at the year to date on that one. What's been going on year to date on that one? Oh, it's also been positive, 1.74%. So even through all these tariffs, if you were keeping up with the market, whatnot, relative to the indexes, you shouldn't have really lost any money. If you had lost some money and you're working with a financial advisor, you might want to ask them, can you explain to me why I lost a significant amount of money, but overall the indexes have been about flat or positive? And, the answer could be that you bailed out at the bottom, which some people did, but it seems like most people I was talking to were kind of hanging in there throughout it. But I have heard some people say, oh, I've lost so much money since the tariff. So if you did lose money, my condolences. But overall, the stock market has been fairly robust. All right, now let's take a look at the NASDAQ 100. We're going to take a look at the year to date. Now, the NASDAQ 100 has actually done about 3.25% positive. So, if you've been into a lot of that techie type of stuff that's in the NASDAQ 100, overall, looks like you would have made a pretty good return considering it's been a bad year for the market with all those terrible Trump tariffs that we've heard about, the apocalypse. But somehow the markets have been managed to be a tiny bit up or relatively flat over the year to date. So I'm hoping, my friends, that you haven't lost too much money recently. If you have, you might want to talk to your financial advisor, ask them why. And if you're looking for some tips or perhaps a change or a second opinion, feel free to reach out to me. Always happy to talk to people specializing in high net worth individuals and small businesses that need help with their investments. We're going to take a look at the 1 year. The Dow Jones in the last 1 year has actually been up about 10%. Oh my gosh. So if we're searching for 8%, in the last year, the Dow Jones has been up 10%. According to a lot of financial advisors, they might be telling you, oh my goodness, if we're invested in the Dow, we've done quite well for ourselves. Let me know how you think about that. Do you think you're doing well compared to the rest of the indexes? Are you performing? Has your performance been positive the last year, or you're getting 10%? Well, if you have any questions about that, feel free to put comments in the comment section below. This is not specific financial advice to you. You can figure that out yourself with you and your financial advisor. Of course, feel free to reach out if you're looking for a more direct opinion, but I'd have to do that on a one-to-one level, not through this broadcast. This is strictly for educational and informational purposes in general. Next, we're going to see, how did the S&P 500 do over the last 1 year? The S&P 500 did a positive 13%. Well, 12.83. We're going to round it up a little bit. Wow. Hey, that's a lot more than 8%. In fact, that's more than 50% better. Amazing. Well, okay. So, did you keep up with the S&P 500 over the last year? Have you done 13%? All right. Interesting question. The next one we're going to look at is the NASDAQ 100. What did it do over the last year? Let's take a look here. Over the last 1 year, it has done 16%. Oh my goodness. That's a lot. It's done about double what we might have been expecting if we're searching for 8% in what's been an absolute terrible year, according to so many people that I've been hearing about. We've all heard about the bad news of the economy. However, all of the major indexes have been outperforming the 8% significantly, of course, as of the timing of this video, for the last 1 year. All right. Now, briefly, we're going to take a look at the 5-year performance on these things. The Dow Jones in the 5-year has averaged about 56%, so about 11% per year. The S&P 500 over the 5-year has done about 86%, so about 17% plus a year, because 5 times 17 is 85. We're taking a look right there at the 86% over the 5 years. Okay, and then we're going to go ahead and take a look at the NASDAQ 100. What did it do over the last 5 years? Over the last 5 years, it has done 120%. Has your portfolio been doing 24% a year? So I hope you've enjoyed learning just a baseline of what some of the American indexes have been doing, the ones that we most commonly watch over time. I always like to look at the more recent times, which are often affecting our day-to-day feelings. But remembering, since we're long-term investors, we're looking at the long term of the indexes and seeing how they're doing. And I think recently, last 5 years, they've been doing surprisingly well. I hope your stock portfolio has also. All right, the next thing we're going to be taking a look at, I'm going to go back. Let's look at one of the foreign indexes just for fun today. The Nikkei might have been hit hard, especially it looked like they suffered from some of those tariffs there back in April. Let's take a look at the 1 year. Ooh, the 1 year is down 3%. So the foreign markets seem not to be as robust as the domestic markets. Let's take a look at the 5 year. However, the 5 year seems to be outperforming the Dow, at least in the Nikkei. Okay, so next thing I want to look at, just for a little bit of fun, having a little bit of good times, I wanted to look at a character that I've heard about. This has been like the ultimate male in cyberspace. His name is Giga Chad. I don't know if you've heard about Giga Chad. It looks like we got all kinds of fun stuff here. I think the one that I've seen most is this picture right here on the right. And it actually reminds me of a famous American speaker and businessman. Now, Giga Chad actually has his own currency. I guess he's some kind of a Bitcoin or something. Now, I'm definitely not recommending that you get into this, but just for fun, we're going to talk a little bit about it. I tend not to get too much into cryptocurrency investments, though I do understand them, but I don't necessarily recommend those to my clients. To yourself, if you're interested, make that decision for yourself. Work with your financial advisor. Make the right decision for yourself. That is a kind of an alternative investment, in my opinion, not quite as mainstream as the stocks. But who Giga Chad really reminds me of is speaker Tony Robbins. I don't know if you can see the resemblance, but gosh, if anybody has a chin in the real life that can somewhat compete with the animated chin of Giga Chad, and look at those teeth, I think it could be Tony Robbins. So the Giga Chad coin looks like it's down about 3% today. As of the 1 year, it looks like it's up 813%. Looks like it opened at about 0.2%, less than a penny. And nowadays it's worth a little bit over 2 cents, 2.3 cents. Now, at one point, it was all the way up to about 10 cents a coin, and then it's dropped back down. So anyway, just talk a little bit more about Giga Chad. Kind of reminds me of Tony Robbins for what it's worth. And I guess it's also become a cryptocurrency. So like I said, not that I'm recommending any of this, but just going over some fun cultural stuff. Hope you enjoyed that section. Now, the next thing I'm going to talk about is some sad news. I hope that you weren't affected by this, but many of us were. And that was the fire damage in California. How much did the fire damage cost California? $250 billion. Now, some people say that this fire may have been much worse due to mismanagement of resources. Now, I'm not sure what you think about it, but I've heard it said that if California would have had things like water in the fire hydrants, that could have possibly slowed things down, and if they would have been keeping things more hydrated. But who knows? Depending on which side of the spectrum you are, and if you think there's someone to blame, I know a lot of people felt that there was some blame to go around on this one. It's possibly mismanagement of the California's fire resources. Lord knows we've had enough fire here recently that we should have learned something about it. But whether you think the state's been doing a wonderful job, or if you think we might have dropped the ball, feel free to leave your comment down below. I'd love to hear what you're thinking about this topic. Well, I'm going to take a look at another thing that we've been looking at that's been affecting the economy, and that's the Trump tariffs. And I wonder, what do you think's been more damaging to the California economy and to the United States economy? The $250 billion that we lost in the California fire, or the Trump tariffs? Well, I'm not sure if I have an answer, but I did a little bit of research browsing the web via Google, as one does. And I want to share with you some thoughts that I came across. Let's go ahead and take a look at this here. I went to this thing, it's called the Budget Lab. I guess it's out of Yale. This was published. It looks like it's kind of like up to date, May 12th, 2025, so not too far out, a couple of weeks old. And they were trying to do an impact about how the tariffs have indexed the physical effects. So all tariffs to date raised $2.7 trillion. It looks like that's going to be from 2026 to 2035. We can expect 2.7 trillion raised through those tariffs with a $394 billion negative dynamic revenue impact. So it looks like, for what it's worth, they might be saying that really the Palisade fires and the Trump tariffs had about equal impact overall in the nation, if I'm reading that right. Well, I'm not guaranteeing that I've read this right. So if you have an idea, or if you agree or disagree, feel free to comment in the comment section below. I'd love to hear your take on it and see what you're thinking about it. I want to talk about some different stocks. One stock that was actually affected by the LA fire was a speculative stock that I've been looking at for some time now. And we're going to take a look at what happened to that. This is a stock that I've been kind of bullish on. And the reason why I was thinking that I like this stock was because the stock actually had to do with medical and AI technology. You know, earlier this year, I wasn't paying attention, but I thought it was because of the tariffs. But I realized it's actually headquartered out of LA, and the fires did quite a bit of damage to this one. So let's take a look at what's happened. Last day, it's been up about 0.75%. Year to date, it's been down about 16%. Okay, it looks like it's come back from its low about $46 over there in that range, 46.50, 45.92, and now it's up to about $58. So it's bounced back. It's got about half of its loss back, but it didn't bounce back as much as the rest of the economy. And not only was it affected by the Trump tariffs in probably a negligible way, but also it was damaged by the fires being in the Palisades, and I think that a lot of the infrastructure, office buildings, etc., burned down around this one as well. Now, the 1 year on RadNet, let's take a look at that one. It's been relatively flat, so kind of negligible. But if you look at it before, it was having some pretty good growth. Let's take a look at over the 5 year. We're looking pretty good. It's looking up, looking up, looking up. These are one of these stocks where I was kind of liking where it was going, but unfortunately, due to that devastating fire, it seems to have lost a lot of its value. And I heard a lot of shareholders, people who worked for that company, might have sold some of their shares. That also kind of brought the company value down a little bit. So I don't know if RadNet was part of your stock portfolio. It seems like a lot of people are recommending a hold on that one, that it could be bouncing back. It seems to be bouncing back. But talk to your financial advisor or do some research yourself. Feel free to reach out to me if you're looking for some financial advice. Remember, this is just for entertainment and information purposes. I hope you're enjoying looking at this stock. The next one we're going to look at are two stocks that I think you might be a little bit more familiar with. These are the feel-good brands, the big names. First one we're going to look at is, I believe this is Oprah Winfrey's favorite stock, is Target. But over the last day, boy, it's up almost 3%. It's going gangbusters. Let's see what's happened year to date on this one. Oh man, Target's been down about 30% year to date. Well, some people say that this might have been due to their over participation in wokeism. I don't know if you heard about that, but not everybody liked exactly some of the stuff that they were marketing to children. Not that there's anything wrong with that, but apparently there was some perhaps backlash from the community regarding that, is what I've heard. But I'm not sure if that's all the factors. Let's take a look at the 1 year. 1 year, oh, it is down even more drastically. It's down about 36%. Target. How about the last 5 years? Oh, the last 5 years is down about 21%. So kind of disappointing considering the market has been up as we look at the different indexes, somewhere between 56% and 120%, relatively speaking. And this one's been down 21%. Oh my gosh. I think Target kind of a stinker stock right now. So I'm not saying that you should buy or sell this stock or do whatever, but I'm just saying performance wise over the last few years, it doesn't seem to be doing well. It's not kind of passing the spell test, in my opinion. But you'll have to make your own decision whether or not you think you would like to hold this stock, buy more of it, or perhaps sell this stock. All right, the next one we're going to take a look at is Best Buy. And you know what? I really like this company. I like Best Buy. I'm not saying that I like their stock, but I find it's a fine place to shop. And I also like their technical support. I think for a lot of people who are buying computers and they want to be able just to get like help, especially let's say senior people, they might like to be able to buy a computer, go there, get it worked on, get the technical support, etc., etc. So I think they have something called the Geek Squad there. So if you're looking to go someplace and get some help in person, like many others, I do enjoy Best Buy. But let's take a look at what's going on. Oh, their stock is up 2.3% today. Amazing. But let's take a look at what's been happening year to date. Oh, year to date, they're down. They're down kind of like RadNet, about the same amount, kind of getting down there about 16% or whatnot. At least I think that's where they were. Let's take a look at the 1 year here. 1 year, oh, they're down about 20%. Best Buy, couldn't have happened to a nicer company. Well, I'll tell you what, if you got an idea what's happening with Best Buy and why their prices have been going down, let me know in the comments below. Is this just a transition from not too many people going out to buy anything? Too much Amazon, perhaps? I don't know. You let me know what you think in the comments below. Last 5 years, it's been down about 15%. Well, down 15% doesn't sound too bad, but the rest of the market's been up at quite a tick. So, thanks for joining me today. I hope you enjoyed exploring some topics. This is a weekly podcast and it's meant to get you thinking about the stock market, what's happening with the indexes, a chance for us to get to know each other a little bit better, and for us to explore a few topics related to the stock market in order to get some better knowledge and some better insight into parts of the market, and hopefully inspiring you to feel more empowered about the market and understanding market news when you hear it from here and other sources. So thanks a lot for joining me today, America. Looking forward to seeing you next week in the next episode of Searching for 8%. May you find what you're looking for, and may all things in life be good for you between now and then. Take care. Love you guys. Bye bye.